Alrighty, so I think we're live. This is the first TikTok live for Money Masters. I am the CEO, David Giron, and I just want to answer some of the questions that we received over the last few days, and also tell you guys just a little bit about what we're doing here at Money Masters. And I'll just start with my own personal story. I'm actually originally from Guatemala. Through sports, I was able to move to the United States. I was able to get a good education in the United States. After going through college, I thought I was ready for, let's say, take on real life. Got my first job, but then I started realizing that I didn't really know anything about finance, and somehow my money was never making it to the end of the month. You have a credit card, you try to use it, you start trapping yourself into getting some debt. So I think I was living the regular life of I would say the average Joe. In Towards my 23rd, 24 years of age, I started learning about finance. I did it on my own, started digging into reading and the reality that started changing my life. I realized that I was making a lot of financial mistakes, and I had to go back and really educate myself and try to turn my life around. That's kind of where my big passion for finance started. I ended up working in wealth management, worked in the fintech space. But then I realized that a lot of my friends were asking me questions like, David, where should I invest? And but my answer was, just because I'm working in finance doesn't mean I know exactly where to invest. So I realized that a lot of people don't get that education, especially that financial education. Even though I went through university, I thought, I was well prepared, but I never learned anything about finance. I didn't know how to budget. I, didn't know how to differentiate between my wants and my needs, and it just caused a lot of problems. And I think that's a reality for a lot of people. I was inspired by applications like Duolingo, allowing people to learn languages anywhere in the world for free. I thought that was fantastic. And I thought, why can't we do the same for finance? I know that a lot of people might think, finance is like rocket science, or it's, only for Wall Street and it looks too complicated. But I generally believe it doesn't have to be. I think there's things of finance that can allow you to get your life in order, that you can learn and put to practice quite fast and do it quite simple. So once I really started working on the idea for the Duolingo of finance, I actually met my co-founders, which were working on finding a way how to gamify education, and that's where we kicked off with the project. We started by really creating an academic board that would allow us to use some of their knowledge and experience. So we had people that from the education space, people who had spent over 50 years combined in the financial industry, and really try to put a journey, a financial journey that would take our users from the very basics of personal finance and then build up a bit more into let's say, the more interesting things like investing, trading, economics, and so on. And of course, we did it all in really bite-sized pieces of content. We try to gamify the whole process. You get rewards, you get achievements. We also created a stock market simulation where people could get to practice some of the things they're learning and really get a feel of how investing works, but do it with no risk. Coming from the sports world, I love the idea of competition. So what we did is we created these tournaments where people can actually build their portfolios with 100,000 fake dollars. They can allocate it in different stocks, and then they can compete with all the other people that are learning in the application. And at the end of the day, at the end of each tournament, whoever has the best performance is able to claim real life rewards like Amazon, Nike, Adidas, of over 40 different partners. And that's where we pioneered the idea of learn to earn. And that's how we really wanted to incentivize people to keep learning. We made it as simple as possible. Of course, we are not perfect. We've been going at it for about 2 years, and we still find tons of things that we can get better at. I would say that a lot of our users have been fantastic for us because they really share their feedback and they tell us, this is working, I don't like this. So I really encourage everybody to tell us what you guys think. Give it a shot. We want to keep building this to make it the best experience possible for users. And if there's content missing or if there's things that you would like to see different, we will always try to do our best to apply it and really share the best educational content that we can. So that was just a quick wrap up on what Money Masters is. But in essence, it's just a platform where you can learn in a very easy and fun way with about anything that has to do with finance, from very basics to more complicated things, and also get some practice and get some real rewards. Okay, and then during the week we had some questions to ask the CEO and founder of Money Masters, and I'll start going one by one. So the first one is, what are the 4 most important things about personal finance that someone without a financial background must know? So I think the first thing is really knowing how to differentiate between wants and needs. It might sound simple, but we lie to ourselves quite a bit. I think a lot of times we try to justify our purchases or the way we spend money by saying that it's a need, right? You buy the newest iPhone. I need it, I need the new iPhone, right? But do you really need it, or do you want it? So I think it's important to just be honest with yourself about what is a want and what's a need. The second thing that I would say, at least in my experience, was really a great insight was pay yourself first, right? I think most of us, we raised in the idea of, okay, I will get paid, I'll pay for all my needs, I'll pay for all my wants, and wherever I can save at the end of the month, that's where I'm going to save and maybe invest. But what ends up happening is, just like wants and needs, we lie to ourselves, and as we go into the middle of the month, I want to go out with my friends, I want to go have dinner, I want to go to the movies, and you say, okay, maybe I'll save next month, and you keep pushing it. And then you end up at the end of the month and you did not save what you wanted, or maybe nothing at all, or maybe even take on debt, like using your credit card to, let's say, fill the gap for the month. So what paying yourself means is allocate a percentage of your salary or your income so that you keep it in your savings from the very first day of the month. So let's just say you want to say 10 to 20% of your income, you will pay it to yourself. That money goes straight into your savings, or if you're already investing, maybe to your investments. Depends how you want to measure it. We can talk about that in a bit. But that 20% is your money, nobody else's money. And then you got to do whatever you can to survive the rest of the month with the amount of money that you have left over. Might sound hard. I know we live in a very expensive world and inflation. But really, if you really find a way to cut all the things that maybe they're not necessities, you'll find that you can live without those things. So that's my second tip that really changed my life. I would say that another important thing is be very comfortable with debt. A lot of times, we say, we're very confident that next month will be better, or that we will do better next month. And, maybe we'll be willing to maybe take a loan, or, for example, use a credit card to finish the month. The problem is that's when you start racking out that debt, that interest, and little by little starts building up. And what happens is that the next month might not go as you planned, and maybe you'll have a real need to use more debt, and little by little it keeps growing. So I would say really stay away from it as much as you can, unless you really need it. And then lastly is, especially when it comes to investing, I'm nobody to judge, but if you are not really spending the time learning about investments, don't think that you're going to be the next Warren Buffett. Don't think that you're going to be the next crypto millionaire. I know we see that on Facebook, on LinkedIn, or we see it on TikTok, on Instagram. But guys, the reality is that most likely you're not going to be that person. And like a lot of people, you might end up losing a lot of money. So I would say if you really want to start investing but don't know where to start, first of all, educate yourself. Download Money Masters, start learning. But I would say the other thing would be to just look at a S&P 500, go on a cheap ETF like the SPY, and just start building it over time. Start with whatever you can. It's if it's $20, $30 a week, whatever you can afford. If you get started today, it's better than getting started tomorrow. So that would be the second piece. I don't know if that's 3 already, but if I have to give maybe one more is you should really educate yourself before you do anything. I mean, education is your best protection. So don't do anything if you don't understand it. Be taking on debt. Maybe somebody offers you a great loan and you don't know what the terms are or what some of the fine print is. Just make sure that you educate yourself before you take on any of those financial products or investing. I think that'll be the other thing. So the next question is, how do you manage your own personal finances? So I'm quite simple. So first thing is just living within my means. That's the most important thing for me. I know how much I have how much I'm likely to have the next month. So I have my budget. I try to stay within budget. Then I allocate about 20 to 30% to go to savings. From that, I will try to grab a 10-15% to go towards my investments, and I just steadily and slowly grow it over time. I know this might not apply to everybody, but that's just kind of how I do it, and it has helped me quite a bit. So yeah, that's it. For me, the biggest thing has been just living within my means, and that's how I do it currently. I'm very, very critical. If I go out to eat, I want to make sure that I'm not spending too much. So I'm just very honest with myself of what I can do, what I cannot do, and I try to stick to that. So then the question is, what is the difference between saving money and growing money? Okay, so I would say when it comes to saving, it's just basically putting money to the side. And that's great. I think everybody should have an emergency fund. If you can cover 6 months plus, that's a great place to be. You never know when you're going to need it. You never know what's going to happen. I mean, going back, just think of COVID, right? It's something that we maybe thought it was impossible. It happened. So I would really say that most people should obviously have some savings to the side. But also, you don't want to just be saving. Obviously, as you can see today, inflation can really take a hit on your savings. And I think that's the difference between saving and growing. Growing is actually putting your money to work. And there's many ways. You can put it in stocks, you can put it in the real estate, you can make your own company. There's just different ways in which you can put your money to work. So the big difference is, if you're saving, it's just money that's sitting out on the sideline for emergencies and you can have easy access to cash. If you put it to grow, it's really investing it in something that will either generate more revenues or generate your money to grow. So what knowledge do I need to start investing in the stock market? Or how do I start investing in the stock market as a beginner? First thing is download Money Masters. Really, the first thing I have to say is educate yourself. At the end of the day, it's your own money. If anybody's giving you advice or great tips, I mean, it's still your responsibility. If you believe in what they're telling you and you put your money in, it's still your fault because you didn't do your own research. So first thing first is educate yourself, really. I mean, obviously we're trying to get Money Masters to be that piece that allows people to learn about money. But of course, there's all things online. Talk to your parents, talk to people you trust, and just how they learn about the stock market or how they learn. And just find out if you're ready to start investing. I would say maybe something to add to that is never invest anything that you're not willing to lose or that you can afford to lose. I think that's the mistake a lot of people do. Yes, it's tough, especially when you see that people are getting rich and you see your friends that invested made a couple of $1,000 here and there. But don't get sold on that idea. Make sure that you just invest what you have and educate yourself. So those are the two big things for if you want to start investing. So how should I choose the best stocks for investment? Okay, well, I think there's not a single way to do it. Obviously, if there was a way to do it, I think we would all be rich by now. And it's going to go back to education and finding what you like and what you feel comfortable doing. So first of all, do a lot of research. Make sure that you know the risk that you're taking in every investment. If you find a company that you like, understand, how much, what are the risks? What are the potential risks that maybe you're not even seeing or thinking about? Really think outside the box. And then going back to the point that I made earlier, just don't put more money than you can afford to lose. If you do find that investment, just don't risk more that you can't lose. But other than that, I think everybody will tell you there's different ways to finding. There's some people that believe in technical analysis. There's some people that believe in fundamental analysis. At the end of the day, I think it's important that you decide what's best for you. And the best way to do that is by educating yourself and talking to experts. Then what's the best way to invest and grow money if I only have $50? The reality is there's no better time to start than today. The past is gone. The future is uncertain. If somebody's telling you that tomorrow the market will go up or down, nobody knows that. What you know is today. So if you have $50 that you don't mind losing and you want to start investing today, just put it in. It doesn't matter if it's $30, $50, whatever you can afford. It's about starting building that investment. it's sad because I think a lot of people think very short term. We all want to have that Lamborghini or that Ferrari, within a week. Of course, we all want that. But investing is a long process, and it's better if you have a long view in your investments. And you'll see that if you start putting $50 a week, a month, whatever it is, you'll see that slowly you'll start growing. 10 years will go by faster than you think, and you will look back and you'll be happy that you started when you started. So I don't think it really matters how much money you have. Just as long as you can start, it's always a good thing. So what personal finance mistakes should everyone avoid? Wow. Okay. So I would say the first thing, maybe going back to some of the answers that I already gave, but is uh, try to avoid that. Really, it might seem like the easy way out, but it can just create more problems in the future. So try to stay away from that. Only make sure you use debt in the right way. Um, I would say also don't get fooled. If something sounds too good to be true, it's probably too good to be true. So I would definitely be aware for that. If somebody comes with a great opportunity, just make sure that you do your own research before you take any action. Um, and the other thing is, don't try to live a life you can't afford. I mean, I think that's a big thing that we see today. I know everybody's trying to show how cool their lives are in social media, but personally, I just don't think that matters. It's just all about, if you can be happy with yourself and with the life that you can afford, that's all that matters. So just live the life you're comfortable living, and don't try to live, to pleasure or to show off to anybody else. So those are just personal finance things you can do. Create a budget. I know it sounds boring and people think, oh, I know where I'm going to spend it. And there's no need to create a budget, but just sit down, write it down, open an Excel file, put it in there. It just gives you a clear picture of where you're spending money. And you start realizing like, wow, I'm spending too much money, or maybe I have 20 subscriptions to Netflix, to Amazon, to all these things. And you'll start seeing that maybe you don't need all those subscriptions. Maybe you can cut down on some of those. So if you just put it on paper, it's an easier way to really paint a picture of your expenses every month. So definitely set up a budget. Again, I know it sounds boring, but just do it. It'll save you a lot of headaches in the future. What were your financial mistakes, if you had any? Oh, of course, I had a ton. Like, I mean, if I could go back, I would change so many things. But I think it's about just keep learning, keep learning. You made a mistake, get back up, try to get back up, and keep learning. Life is a long journey. It's a marathon, not a sprint. So the first mistake I did is, I know when I was maybe starting my financial journey, I fell in love with the get rich quick idea, right? Trading, recharge, took a course online on how to read charts, and I was like, yeah, I'm prepared for this. Took me a month, spent a bit of money on the course itself, started trading, what's leverage? I took on leverage. I didn't even know what I was using it. Ended up using a few $100s. The moment I had no money, obviously I was looking how to make more money, and ended up losing the little money I had. So definitely fell. I mean, like everybody else, I think, or like a lot of people, I fell for the idea of making money quick. Then I would say I used to not live within my means. I would always try to have the most fun, and if there was a new phone or a new TV, I would try to get it somehow, scrap money from wherever I could, and I think that's good. So I was able to just be very honest with myself. I was able to really know the difference, got to learn the difference between my needs and my wants. And I think that's been I would say the key to at least getting my personal finance in order. But I'm sure I have tons of mistakes, and probably still do mistakes today. We're not perfect, but again, it's just about keep educating yourself, keep learning. And then the last question I have here is, if I have $7,000 that I have saved, and I also have $7,000 in debt, should I continue to grow my money, or pay off the debt and go back to zero? Okay, that's a tricky one, because I think there's a lot of things that we need to take into account. So the first thing is, what does that debt look like? I mean, is it very high interest? If it's very high interest, I would really recommend you kill that. I mean, if it's high interest, like credit card interest, you want to get rid of that. That is definitely not something you want to keep in the books, and month over month you will start piling over. So it's important to just understand what that debt is, where that loan comes from. Now, if you tell me it's very, very low interest, then you can every month it costs you a few bucks just to pay it off. And on the other side of the equation, you have an amazing financial opportunity. Then I would say for sure, just measure both sides of the equation to know if you should invest or not. Now, when we go to this other side on the investment, I would say, you have this 7,000 saved up. Now, do you have an emergency fund? If not, maybe you don't want to invest it. Maybe you want to keep it in cash, or maybe you just want to invest a little bit of it. So I think it's very hard to just say from the question what you should do. And obviously, I don't want to give any advice because I don't know the situation of anybody. But the first thing I will look at is the debt, how high of interest it is, and how that scary could be in the future. And then you look at the opportunity. If it's something that you have researched and you're well educated in the financial space and you're very confident about this opportunity, maybe just put a little bit of money into it. Don't go all in. Maybe kill a little bit of the debt. So it's just about really understanding your risks in both sides of the equation, and based on that, you should act accordingly. So now I see that there's some questions. Let me see if I can pull them up on the comments. I'm very new to the whole, let me see, interact, share. Obviously, I'm not the best at this. 1 second. Who's your favorite investor? Technical, fundamental, momentum, and mix? So I'll be honest with you. For me, the big thing was the book that changed my life was The Intelligent Investor. So obviously, Warren Buffett, Benjamin Graham. So for me, Warren Buffett is just a role model to follow. I know it's cliche. I know it's what everybody knows, but he has some very simple things that you can put into play in your everyday life. First thing is, if you're not gonna spend tons of time researching and really looking at companies, then don't try to pick stocks. I mean, if the professionals that spend all day every day can't really get it right, what makes you think that investing 20 minutes a day will make you good enough at picking the stocks in the long term? And that's why he always says, if you're not willing to put that time, maybe go to an ETF that is cheap. There's another investor called Manish Babrai. He's also a value investor. I think he's done a lot of great. I mean, he's one of the. He follows Warren Buffett's ideas, and he's done some great investments as well. So he's probably an up and coming guy that most people will start hearing about in the future. And then, of course, you have, if you like more of the private equity side of things, I think those are quite interesting things. I mean, obviously BlackRock, Blackstone. So there's this KKR, there's a bunch that you can follow. But for me, I'm quite into, slow and steady wins the race. I like value investing. I do enjoy researching companies. So that's why I take a little risk with some of my money to really put into companies. And then the rest goes into ETFs. So I think if there's no more comments, let me see if there's any other questions. So I did see some, finance is so complicated. Well, I mean, I don't know if that's a question, but I agree. Finance seems crazy. I just remember when I was in college, I had an economics class and started learning a little bit about finance, and I thought it was interesting, but I was super scared to even start learning because I just thought, I hate math. It seems that it's like rocket science. So because of that fear, I never got started. And I think it was a mistake. If I would have gotten started earlier on, I think my life would be in a different place. But it's life. So, we can only act in the present. So I would say, start today, start learning, and go from there. But if that's it for the questions, I think I'll be wrapping it up. Please check out Money Masters. Let us know what you think. Feedback is how long until you use leverage? Wow. I'm actually, me personally, I don't like using leverage. I would tell people that if you don't know what leverage is, don't even go close to it. To be honest, if you're trying to make a quick buck, it's probably not going to end up for the good thing. So I would suggest that people stay away from it unless they really, really understand it, understand the risks they're taking. So just on my playbook at least, how to use it. I believe just going over time and Now, there's different ways of leverage, of course. So, if you're gonna take a loan to buy a house and stuff, I think that's quite good. But it's just about really measuring your risk, understanding your risk. I think that's the biggest misconception in finance. It's not about the opportunity, but it's more about understanding the risk that you're taking with every action, be it in the stock market, real estate, and so on. So just understand your risk, and then if you feel comfortable taking leverage because you have millions in the bank and you just want to risk a little bit, then go for it. But I would just suggest staying away from it, especially if you're starting, or I mean, even if you know quite a bit, I would say stay away from it. There's no need for it. But yeah, so thank you for the questions. I really appreciate the time from everybody. So please join Money Masters. Take a look. Let us know what we can do better. We want to keep creating more content. We're going to have the application in Spanish. Hopefully start going into Latin America and get that Latin community involved as well. So yeah, let us know what you guys think, and thank you guys for the time. I'll be logging off now. And now.